Sunil Subramaniam joins us, Managing Director and CEO with Sundaram Mutual Funds. Sunil, mutual fund manages a program to always talk bullish. For a change today, let's talk realistic. Dil khol ke baat karte hain. Okay. Sure. Forget the compulsions of being a mutual fund manager. If I look at the micro data, autos, HFCs, liquidity, what is happening to FMCG sales, all of them are pointing to not pain but acute pain for the economy. Because these are lead indicators which tell you that slowdown is here.
Correct.
So why should we be bullish?
So we should be bullish because of two reasons. One is always if you know the cause of a particular slowdown, right, then you're prepared for it and you can act on it. The worry is when things happen unexpectedly, like the global financial crisis, like tariff wars, whatever. The two things which are all the factors that you mentioned, and there are two clear indicators as to why they happen. So the first is in a 12 to 18 month period that the government spending on infrastructure and economy came down and shifted to the social sector in the run up to the election. As you know, government is a multiplier. The government spending multiplies into the economy and the government cut off that tap, right? Infrastructure, then automatically everything suffered on the line. So that was the first trigger. This happened from last December when the semi-finals was lost by the government. When they realized that this farmer lobby, this giveaways, so that's the point of them was subtly the government shifted into a populist mode,
the World Cup
which worked.
Has got on to you also.
But Sunil, fair point.
That's one. No, there's one more point I wanted to make. The second point was the NBFC crisis. And here again, there is partly a government hand in it. See, actually, if you look at it, and I said this on our show also many times, that's the NBFCs who actually drove the economic growth. Because banks with this NPA overhang had got scared of fresh lending. Forget about what was reflected in the stock market in terms of their balance sheet and EPS growth. Fresh lending, they got scared because all the past loans were going bad. And that space was filled in by the NBFCs. Much as you may decry the fact they did asset liability mismatch, that is, for the economy, forget about the NBFC, for the economy, NBFCs played a vital role because consumption was driven by soft loans, housing was driven by loans, gold financing, which is non-purposeless lending, right? You can use it for anything, was driving. That NBFC crisis started the consumption crisis. And government not acting to stop that crisis or arrest it because of the elections. So I would actually say the government in a way is inaction of the government on the infrastructure front, very strong words I'm using, have caused this. But I'm saying there was a reason for this, no? That is the impending election. Now that election is over, now that despite all that bad economic news the government has come to power, knowing that they have to tackle this, I see the government going back on the infrastructure.
Okay. So I agree and I completely respect your point here. So if government did not spend on the infrastructure just for the benefit of our viewers, road, bridges, dams, they started spending in the rural sector, right? That's what they've done. If that was true, then why is the rural economy also suffering? It's not that after the PM Kisan Yojana, your two-wheeler sales have gone higher, FMCG sales have gone higher. The rural economy is suffering.
There's the answer to that.
And which is?
Today, there is only 30% of rural incomes are driven from farm incomes.
No, but where is that money?
Government's infrastructure spend actually creates income in rural families because the cement, the sand, everything, the lifting. So most of the rural youth are actually going and working on these kind of thing. So the lack of government spending actually meant lack of income in rural India. And on the back of it, we didn't have a too good a monsoon last time. Right? So that combination led to the consumption. That's why I said, for me, this single-handedly, the government, suddenly, from the first 2-3 years where they were gung-ho, suddenly there was a slowdown, and that's what, if you look at the numbers coming up, IIP, core sector, it's all those government spending areas which are there, and it's reflective and coming into this. So I think that with this budget, with a strong majority behind them, we have 5 seats short of a Rajya Sabha majority, so lots of stuff which the government can do, right? I think that the time, and when people say why and not why not. Like today people, if you go and recommend to buy a cyclical, economy sensitive sector, they're all pointing at the bad news saying, Abhi kyun kharido? Abhi kharidne ka waqt hai.
So give us a list of where you feel one should buy, the economy linked spaces.
So for me, cement and steel are two things which whether anywhere sector, the demand should be rising continuously. The second is where is the government's impetus likely to be, right? The government's impetus is likely to be in continuing on the road, railway infrastructure, right? So that's why it's the railway infrastructure is steel. Road infrastructure is cement, again steel and concrete. And the next cycle to that is the capital goods suppliers, because when you create power projects, the government's one of the biggest focus is going to be on power. Now the power, I'm not going to buy the power companies, but the companies are going to help build the new power capacity, right? So there are turbine suppliers, there are capital goods suppliers. These are the guys whose order books, whose valuations are today low in terms of the fact that they are discounting a past PE ratio, and hence they're looking rich, but from a future growth perspective. So capital goods cycle, whatever the companies which supply to the capital goods. So when I say infrastructure, a lot of people mistake to say, I'm going to buy infrastructure companies. No, I'm going to buy a supplier, the guy who's going to build that infrastructure.
Facilitators.
Yeah, facilitator. So those strength, and for the risk of sounding thing, banks. Banks are going to make your money. And today we are come to a stage where I would say that even public sector banks, I was so far bearish on public sector banks, but I believe now that the worst, if you look at the incremental NPA being published, I think there's been a dramatic change. I think mergers, maybe one or two more mergers are left. And I think that since the NBFC crisis, RBI is not acting as much as the government wanted it to act. Whether the budget will be used by Nirmala Madam to do something to the NBFC or not, it's still going to take time for the NBFCs to come back. And I believe that banks will be smart enough to sense the opportunity and now step in. Like, either they buy a microfinance which gives them the last leg, like, Anderson did with Bharat Financial. But that lending gap, I think the banks are ready to step in now, because now with the NPA fear behind them, with the thing, I think their pockets will be freer. Yeah. So to me, banks are the ones where you will see the biggest gain, because if you see the highest, best valued bank and the lowest valued bank, it will be like, are they in the same sector? Right? So I believe that today you can't go wrong buying banks, right? Yes, you apply a little bit of judgment, but because people get scared at some valuations. And the other ones...
But again, within PSUs, do you stick by with SBI or do you move a little lower down the pipeline?
I would go to those banks where the merger cycle has happened. See, because the yet to be merged bank is where there is a short-term uncertainty, because what you think is a good bank will suddenly get dragged on because they'll merge a weak bank into it. And it's still not time to go and pick a weak bank saying it's going to get merged to a big bank. So definitely its future is going to be good. Right?
So BOB, yes or no? I can't understand.
Don't drag me into a stock. I can't do the stock related. But I told you, right, where the merger cycle is over, right, obviously the bank which was being merged, right, there was a good bank there, right, and there were two weaker banks being merged. That's the thing. I think one or two more are there, will come up. So I think that banking is a core sector, because now today, whether it is retail lending or corporate lending, whether it's SME lending or infrastructure lending, banks are the only ones which have to prime the economy.
So, Sunil, in last this decade, if I talk about 20 years, 20 long years, in the first 10 years, which is 2000-2010, if you bought into private banks, you hit a home run. All you had to do is that, let's say, buy a piece of HDFC Bank or ICICI Bank, or for that matter, any other private bank, you've hit a home run. Government vacated the spectrum, you got business. Then the NBFC theory, which you said that how NBFC started lending, because banks had stopped lending.
Absolutely.
So if I have to, let's say, talk about the next 5 years, next 10 years, within the financial space, where is that big trend, which you would say, look, this will be the next 10-year, 20% compounding within the financial space it's coming?
I would say it will come from this services, financial services space.
Which would be mutual funds?
Insurance, mutual funds. I believe that story has not at all been fully exploited.
What is stopping you from buying mutual fund shares of HDFC, AMC or Reliance Nippon? You are the CEO, you understand the business. This is a financial trend which is there. If I scan through your portfolio, you don't have HDFC, AMC or a Reliance Nippon. No longer Reliance, now it's Nippon AMC.
Nippon AMC.
You're sounding bullish on the trend. What's stopping your fund managers from acting it? I'm just asking a question without getting into a stock specific question, because your core holdings are still private banks.
Yeah, my only concern on this mutual fund is the regulatory overhang. Okay. I just want to see a little more clarity on the regulatory overhang. It's over-regulated industry, frankly. So that's the uncertainty. See, the latest SEBI regulations put an impact. This is the only industry where the regulator can impact individual company profitabilities, right? That's one. Second is this mutual funds were a big part of the asset liability mismatch created in the NBFC sector, right? That impact is going to come back and hurt. You're seeing credit funds getting impacted. And I think so, some extent, right, I would say while overall growth of the mutual fund industry will be good from a stock market specific perspective, to have a predictable model on the revenue, we are yet a little bit away. Insurance is far more predictable, I would say. But in the long run, yes, asset management will be a big play because there are only two players available now. One had the overhang of something else. The other one's valuations were fairly rich.
You've painted a very solid picture, Sunil. One would go away from this conversation, being very optimistic about the way ahead. I just want to understand, you've got the budget around the corner.
Yeah.
In terms of clear takeaways that you'd anticipate this time, everyone's hoping for positive triggers. We all know that they're also very adept at painting a good picture without any clear executionable takeaways. Is there anything that would be on your wish list, in terms of something that could be done straight away?
I think two things. One is we need money to finance infrastructure. And the government has a limitation how much can borrow because of the fisc and with all that. So I think that the disinvestment, divestment program of the government is the one which is most critical to create the financing, equity financing. Not only that, even the private sector capacity creation, 30% of every private sector project has to be equity financed. So even private sector needs to raise equity. So I think the realization of the government that the equity markets as a source of direct disintermediated financing of capex, right? For that, I think the removal of the LTCG tax, because clearly that tax came in, it has not yielded any money, but it's a sentimental thing. Right? It's not a big revenue loss to the government. If they just announce that we have implemented this, seen that it's not worked, we'll take a call later. Right now we are taking it away. There'll be a huge boost to the capital markets and government can rush in and raise its capital allocation because finances are very important. Second thing I would say is that the key next 5-year term factor, right? This year the government got away with underperformance on the economic in a lot of areas. Next term, they know they can't get away without the employment bit. 5 crore additional voters have voted for the NDA, and they are from 70% from first-time voters. Now, the first-time voter is obviously 18 to 25, and he's today given the benefit of doubt to the government, saying, I don't have a job, my brother doesn't have a job, but still I believe the strength or the courage, whatever was Chaukidar, all of that. But 5 years from now, if he doesn't have the waqt ki roti.
3 years.
So the employment generation, so why I'm saying this is so the real estate sector is the biggest employment generator in the country.
Is there any view in the market that LTCG will be rolled back? Is there any thought? Because I've not heard anybody on the channel, outside this newsroom, within my core market circle, even whispering that LTCG ka rollback aa raha hai. Can it happen? Or it's foolish to even think about it?
No, I said that a smart finance minister would roll it back.
Because nobody is making money.
Exactly.
I mean, you may change the sentiment. Just think about it that ever since LTCG has come back, who's made money? I mean, you got your Bajaj finances and you bought your, HDFCs and the separate story. But the average guy who's bought into mid and small cap stocks has not made money because markets have been in a linear decline. You may not get a lot. You may not get a lot in terms of keeping the LTCG, but you change the sentiment, Aisha.
But Nikunj, I mean, to be fair, if the government's intention is to widen the tax net and they're also making land records go digital, I don't think such a move will be rolled back.
No, I mean, I know it's not going to be rolled back, but theoretically, think about it. The reason why LTCG was applied.
No, that I know since last 1st Feb. I think that called the market peak, in fact. I mean, we can feel joyous about this 12K mark and all, but that was the end of excitement for equities.
Why? Because you were facing criticism from the opposition that time that this is a suit boot ki sarkar. You never wanted one small segment of India, or society of India, which is 2%, 3%, or the promoter-driven group to make disproportionate gains.
To go scot-free without
15,
tax.
16, 17 were great years. But right now, who needs a vibrant capital market? Well, more than you and me, government, because they need to sell paper. You change the sentiment, you change the P rating. I mean, I know it's not been rolled back, and I don't think we should imagine it. But if
it happens, then yeah, I think it's going to be.
You asked my wish list, right? You asked my wish list, and I'll tell you why I said this. Because the person who introduced this was Nirmala. Many people don't know that.
Was it?
She was a consultant before, and she had seen a lot of this tax
LTCG
thing,
was her idea?
at the back end. So now, by then she realized that she made that suggestion there, so it's easily she can reverse it because she was a brain behind that because she had come from EY, the consulting thing, into it. She had seen these tax things and she wanted to contribute at that time to say, hey, you can make a lot of money. But then you realize it's not worked, right? Then why have something which is, there is no gain, khali pain hai. Right? So I'm not saying that anybody is saying this. Like you could say nobody else in the industry, but I'm the only one If you ask me my wish list, that's my wish list, right? That's today what do you need? Capital markets are sentiment driven, right? You need that sentiment trigger. The financing will come in, then the economy will follow. So I'm just saying, if they could do it, it'll make sense. And if you want to be somebody who is making a request to the finance minister, I'm there up and ready to make the request to the FM.
We'll have you the day of the budget as well.
Yes,
make
okay.
all your requests and of course then dissect all that she does as well. But good to have you in the studio,
Right. Thanks a
Sunil,
lot.
as always.
Thank
Thanks
you.
so much.